as long as we maintain 69.2 on a weekly basis and the bull flag remains, you have to think that we're headed back up to 74. So Bitcoin got its first daily, weekly, monthly, and quarterly close above 69.2. I did say that that would be bullish, and it is, right? So as long as you don't close on the weekly back below that, that remains bullish. However, today, and this is, by the way, to members of my Smart Money crypto service, I talked about this, but one of the things that we have to watch is we have a bull flag of consolidation here. So that is also bullish as long as that pattern holds. However, if we start on the daily trading down in this range, the bull flag fails. Now, on a basis, let's say, let's do some hypotheses, right? Let's say the bull flag fails and we start trading lower. Does that mean that it's all of a sudden bearish? The answer is no, not until you get a weekly close back below 69.2. All right, so you have to watch it in stages as we go. But as of now, as long as we maintain 69.2 on a weekly basis and the bull flag remains, you have to think that we're headed back up to 74, just under 74, and then potentially even higher on Bitcoin's price. But again, just be aware, it's a little suspicious. The one thing that kind of raises my eyebrows, and again, I'm always a contrarian thinker, is that if you go on social media, everyone's like, oh, it just closed above the weekly, the monthly, the quarterly closed. In fact, I saw Pompliano on CNBC today, and he was saying, you know, the last time we got to close above this, Bitcoin ran 300%. To me, in my head, I think, oh, are the institutional money just wanting to get the last bulls on board so that they can pull that rug from underneath? That's the way my brain thinks. It's like a messed up way of thinking, but I'm always, because I've been burned so many times in my early career learning how to do this stuff, I can't help but be skeptical. It's just the way I am. A lot of you guys maybe aren't at that stage yet where you've been burned that many times, but over time you start to become more and more like that in your mind. All right, couple other charts here. Ethereum, I know you guys want to talk some Ethereum, so let's quickly look at that. Then we'll get into gold. We'll get into some other stock charts as well. But Ethereum, guys, here's the trend line to watch, right? So you basically have a level around 32 to 3,300. As long as price holds above that, it is a positive. It's a neutral to positive bias. If this line, if you start trading below this level here, then that is a technical breakdown, and you have to start looking for significant downside. Short-term support would be this low at 3,000, but if you take that out, guess where you're going? Down here. Now on the upside, as long as you stay up here, you could easily float back to that double top at 4,000, all right? So again, by the way, that's how trading is, by the way, or investing. It has these pivot points, these fulcrum points, right? Where when you're on one side, you tilt this way. When you're on the other side, you tilt this way. And this would be your fulcrum point right now. Fulcrum point, again, being which side are you on, which side are you, the probabilities most likely favoring. So as long as you're up here, you angle there. If you get below here, now you angle to the downside and the probabilities flip. So we're just doing a little bit of everything. So if we look at this, guys, so Apple this quarter, let's talk about this. So the probabilities on Apple at this point are that it is going to go lower. Yes, it's still holding support, but the kicker is this, right? Is that you have this neckline, right? And let me grab my pen here, and I apologize, guys. Just not used to going back and forth so much here. But basically what we're looking at is we have a head and shoulders pattern that hasn't triggered yet, but it certainly, to me, looks like it will trigger. And what I mean by that is, if we look at this, right, very clear shoulder, head, and shoulder. Now, if you violate this level, which is around 169, that's where it kickstarts to the downside. Okay, so again, we'll watch and see there. But again, just interesting to watch here. The reason why I think Apple is going to break lower is because, number one, we know revenues continue to decline overall. Sure, they're doing buybacks and as well as other things. But yep, that's a great point right there. We will be watching to see if this neckline breaks. If it does, 155 and then 135 is a target. Now, if the NASDAQ were to correct 10%, do we think that we would actually see, you know, at 155? Well, yeah, 155 is a no-brainer. 135, it might have to be a little bit bigger than a 10% correction to get Apple there. But certainly, again, if we zoom out on this chart, what are we seeing? We know that's our first level there. And by the way, just a quick teaching moment. How do I calculate that lower level on the charts? Let me just zoom out here so we can see it. So how do I calculate my target of a head and shoulder? Educational tidbit right here. We basically take the high of the head, drop a plumb line straight down. So this is called the neckline, where you connecting right to the shoulders, right? Like right here to here. That's your neckline, right? And you take that distance and you replicate it from the break point straight down, and basically that takes us down there to about 135, give or take just a little bit. It's a good thing to know because, again, we always, when we see a pattern break, it's very hard to understand, well, where's it most likely going to go? And in this case, we can clearly see that the likelihood, and by the way, not in stone. Please understand that there's nothing that I say that's ever in stone. Investing is always a motion, movement, always changing, new data every single day that changes your projections. But generally speaking, that would be your target that you would look for. All right, follow me over here. We're just gonna cover gold and oil and a few other commodities. Gold is just rock star status here, guys. I mean, this is just incredible to see the upside. The one thing I will say is, you guys know my upside target is above 2,500. That's on the bigger macro move, but I want to show you this target price and how I'm achieving it that's a little bit lower for at least a pullback, okay? Now, the pullback level is essentially, let me just zoom out. I actually have to go to my monthly chart. We have to go back that far, so let's do that. And basically what I did here to factor this in is take your high from 1980, attach it to your 2011 target, or your high from 2011, and this to me would be the next level. So again, this is just above 2,300. We're actually very, very close to this at this point, right? You can see that. But looking at this again, pivot high from 1980 to this high of 2011, and where are you likely to get a pushback, a little retrace? My guess is, by the way, you could retrace back down here before the next leg up, and that'll be just above 20. I think it's around 2320. Don't quote me on that. You guys can do it on your own charts to find out exactly where it could be. All right, next up, oil, guys. Oil has now achieved that hit of both trend lines. You guys know I was bullish on gold, on oil down here. We were talking about a breakout. It broke out above 80. We got a target of 85. I then lowered my target because I found these two trend lines that were converging. We've now hit that level. Now, I'm not short oil yet, but I am looking very closely at this. If this upticks just a little bit today, I'm likely gonna start a small short position. Now, does that mean Gareth's gonna be right? No, of course not. Listen, I have plenty of bad calls in my life. That's just the nature of being an investor. I just want to win more than I lose, basically. But the point is that probabilities favor a pullback based on two converging trend lines. Think about it as if you have a wall here and then a wall joins it here and you get double the wall. And that, again, is very hard for price to break above. Next up, guys, if we look at natural gas, I love this chart, by the way. And the reason I love this chart, is because notice how we broke down, and I talked about this in this game plan. I said, okay, guys, it broke down. Now let's watch to see if it confirms. Or is it a fake out by the big money players out there that just want to get you freaking out so that you exit your trade? And what happens? We went right back up in that range. Did not confirm. Look at price. Boom. I mean, this stuff is crazy. I mean, you got to learn this stuff. Learn technical analysis. You spend like 5 minutes a day. I got to come out with like 7-minute ads or 6-minute ads. I got to do like 6-minute TA a day or whatever it is. Maybe you get it from these game plans because this stuff saves you. It means don't panic here. Don't panic. Listen, you want to be aware, but don't panic. And then what happens? Good thing you didn't panic because you knew about confirmation, right? Hey, listen. Good, bad, is there something we can improve upon? I hope you do like it. But again, I want this to be the people's place to come for financial education. I want things for you guys. Yes, I do have to charge for some services because I have to keep the lights on here, everyone, employed and everything like that. So understand that. But I'm trying to give as much free information as I can to help you guys do better in your financial quest.